Bro? Good morning or good afternoon.
What's going on?
Dude, good to hear
Good
from
morning
you.
for
Hope
him,
you're
bro.
doing well.
It's like 8 o'clock by him, probably. Right?
Yeah, 9 a.m. 9 a.m.
Oh my.
Yeah,
I just
I
got.
casted a spell in the air, and I told the spell that I casted to bring Bullshark, and then he low key appeared.
That's what happens, bro.
Yeah.
That's what
No,
happens.
no, I'm not even joking. I'm really not even joking because I was wondering about this downtrend break on QQQ. And I was like, I bet I should go to Bullshark's Twitter, and this dude just pops up.
Yeah. I always talk about that, bro. Like, I don't know. Dude, QQQ is like a fucking godsend to traders, man.
Dude, I can't believe I've been trading fucking shit caps, man.
Dude, where have you
Bro,
been?
welcome today, bro.
Dude, that's what I'm saying, dude. We
told
nailed
you
the calls.
months ago.
I know, dude, and I'm stubborn, bro. It's fucking stubborn. But yeah, I mean, all day we're just nailing the pivots, right?
Dude, I used to clown like fucking small cappers used to get horny for like 10%. How
Dude,
easy is it to get 10%
I was telling
options,
everyone,
bro?
dude, exactly. I was telling everyone, I was like, you can make your living off 20% trading a small cap, right? And then
Bro.
now I'm coming in, the base hits are like 50, 70, 80%.
Yeah, yes.
It's
Bro,
insane.
people used to fucking clown on me when I used to tell them, like, oh, yeah, my account's up like 30-40% today. They're like, the fuck are you talking about?
Yeah,
Like,
dude, they think you're
what do you...
capping and shit. Like today I'm up 15% today,
Yeah, bro.
And it's like that's
Very
crazy on
easy.
the account, dude. That's nuts.
Dude, and that's basic, bro. That's normal. Like, I don't know, last week, bro, I had like 110%, 115% day on my
Oh yeah, I
account.
saw that, man. That was nuts.
Yeah, this shit's too easy, bro. Child's work.
Exactly, dude.
Maple, do you see that downtrend break? It retested it, and then at that same downtrend break spot is the what is that? The 396 area where you were saying no candle closed above it.
Yep.
The upper wick rejected off of that too.
Yeah,
So
right
you had
here.
like a downtrend reject and that level too.
Yeah, exactly. See, it tried to base here, but on the lower time frame, right? Whenever we get a pullback on a candle, we need to mark the lowest risk, and we get a
Wait, hold on.
pop up
I'm looking
here.
at calls though.
Oh,
Because look at the 5 minute. Look at the 5 minute on that EMA, and then the 1 minute is now on that 20 EMA.
okay. Yeah, I got you. Yeah, I'm still watching these 394 puts, right? Because it's still a lower high, right? Lower high, lower high, lower high. We reject off this downtrend. Now, I do see that the EMAs have crossed above, so there's that bullish aspect of it. But I mean,
You like the 9 EMA, bro?
yeah, I use it on the 1
Yeah.
minute. Yeah. Well,
Yeah, I don't trade 1 minute or the 9. Only 3, 5, and 10, and then use the 20 and 200 EMA, bro.
do you use
You'll
the
have a good
50?
time. No, not the 50, just 20 and 200.
20 and 200. Okay. What do you use the 200 for? Like what when you see that interacting with the 200, right? I mean, I understand, either support or resistance if it's approaching that level, right? But what is the 200 EMA to you?
So 200 is like the strongest wall, bro. That's where you're gonna have like, I don't know, your highest probability, highest profitability, lowest risk type trade. I mean, even right there, you can take both calls and puts and close one out, whichever direction it takes, and take a small loss on the other side and run the other one. But usually that's where you get your flip, right?
Yeah.
It's like a general turning point. Like you're either gonna get a bounce from there. If it breaks down, it's going down, bro.
I got you. Yeah, so you're kind of like hedging, either way, whichever way it's
Yeah,
gonna go.
like for example, like you know how you played QQQ put today, right?
Yeah. Yep.
So that exact spot was like right over the 200. It couldn't hold over the 200, so guess what happened? It dropped.
Yep.
As soon
Yeah.
as it broke the 200, was like kind of my confirmation to take my put.
Yeah, I do see that. Yep, I'm watching NQ. I mean, I don't have it right here. I need to add it, but let's put it up on the stream /NQ. I'll add the study. And my shit's lagging.
Bro, let's fucking go snap the snap call.
Oh, here,
The
we'll just do
snap call.
QQ. Right, this is what Bullshark's talking about right here. Okay, so we have what is this? The 200 on the 5. Oh, this is on the 10. I think on the 5. Yeah, this is what I was watching.
Yep, there you go.
Yep, popped above it and then died. Right. So
yeah, as soon as it goes right under, bro, that's your like you're confirmed. That's
yeah,
where you can.
I added
eyes up.
really heavy here on the
Yep.
when it failed its VWAP here, right? Do
Could you
you
repeat it
use
one more
VWAP?
time, bro?
Yeah, I only use VWAP 20 and 200.
Okay, VWAP 20 and 200. Okay, I'm gonna write that down.
Do you find that the 9 just doesn't give enough support or resistance? Is that why?
9 is just too quick, bro. I mean, yeah, it works. It's fine, but I want the bigger move.
I get it.
Dude, that literally using those 3, I caught a I closed out 1400% on my QQQ put yesterday, but they went like 3,000%.
Yeah,
bro.
dude, I saw
Bro,
that the other
literally,
day.
bro, literally, bro. That shit hurt, dog.
You saw that?
I got in at 20 cents. I sold for 400. I look at it, the shit is up fucking 300 and like
Bro,
3,400
I
at
picked
the
up
end of
each
the day.
contract for a quarter, 25 cents. I sold
God
each one
damn.
for like
You got the full
340.
shit, bro.
They closed at fucking like $6
Shit.
on a 0 DTE.
Dude, I
bro.
know
It was-
yesterday they were like, I saw the low of that contract. It was like 18 cents or something like that
Oh,
yeah, I
yeah.
caught it
on those
pretty low,
puts.
bro.
Yeah,
Not
dude,
gonna
that was
lie.
insane. I mean, even if you took $1, right, that's still 600% gain right at close.
Yep.
Literally just buying them when it was dead.
Bro.
Yeah, and everyone's like nutting. Everyone's like
Already.
nutting themselves because like small caps are getting like 1, 2, 300%. Right? I saw that, but dude, that gave me no amount of FOMO because I'm like I was already preparing for the following day, right? For what I wanted to do on the Qs tomorrow.
That's right. The Qs is your best friend.
Yeah, dude.
I'm
So
addicted
and
to it.
what are the tickers that that you primarily trade? I think I know you trade Disney and the Qs, but you know what are some like of your go-to things that you've kind of have under your belt as tickers that you know that you can run to and trade because
So
you understand their personality.
yeah, so I mean it's not even about personality, but you have to think of it this way too. Like for example, the best example I can give you, like QQQ runs based off of like 3 or 4 stocks. Like that's the weight, More than 10% of QQQ is based primarily on Apple. It's based on Microsoft, based on Amazon, and Nvidia, Tesla, whatever. So if you track 3 or 4 of those main stocks just based off that and the VIX, you can know where your QQQ is gonna go, bro.
Oh yeah, for sure. Yep.
So,
Yeah,
so
I'm trying to keep them in the watch list right here to see what they're doing, right? AMD, Apple, and Tesla and Microsoft and stuff.
yeah, all you need is pretty much Apple, Microsoft, Amazon. You track those 3, you know where QQQ is gonna go, bro.
Okay, for sure. Thanks, man.
Yeah,
Yeah, I
those
appreciate that.
anytime, bro.
Damn.
Yeah, that, and then I don't know if you use Webull. Do you use Webull at all?
No, I mean I have a Weeble, but I don't use it on my
Okay.
desktop. I need to
Okay.
I need to fund it because I had to negotiate lowering my commissions, and I didn't
Yeah,
realize
there's
that.
no commissions on Webull,
Yeah,
bro.
I didn't even realize that, because I looked last night or this morning and I was like, I just paid a couple $100 in premium just yesterday, which is not a big deal, but that's a couple $100, in
Yep.
hindsight, right? Every single dollar matters.
Of course it does. But yeah, it's not even about the commissions, but there's this one tool that Webull has that no one else has that I specifically use every day that gives me a little edge. Okay? So if you open the Webull app, okay, go to the markets tab
Okay.
and click United States on the top.
Let me
Okay.
see. Weeble markets. Okay, United States, yeah.
Hey, you showing them the inflow,
Yeah.
okay?
Scroll down a little bit and you'll see advancers decline distribution.
Oh,
and then
yeah.
right under it,
Yep.
it's net inflow.
Okay, yeah,
So-
I actually I saw you using that yesterday and I bumped that up last night because I wanted to see, what try to implement that into my trading, but what does that tell you, right? The inflow. I saw that you
Bro,
on your post last night you circled the negative, the outflow on that. So
yeah, bro. This is your most useful tool you're going to use, bro. So this is pretty much money coming into the market and money leaving the market, like the overall. Right? So,
okay.
for example, today in the morning, you had around 700 mil inflow and only like I think it was like 70 or 80K outflow. Right now, you have the same amount of inflow, which means there's no more money coming in, but your outflow is over $1 billion. So even though the day started off as bullish, which you saw in like the first 30 minutes, you had like a run up on a bunch of those tech stocks.
Yep.
As soon as that outflow started hitting, you had a giant pour out, bro. So just tracking that outflow and seeing that number rise will give you like an extra confirmation that, hey, if I'm taking a short setup, it's more likely to hit just because there's excess money leaving the market.
Okay, yeah, that makes
So,
sense, right? It's just
yeah.
you're
So
trading
that's like
with those
exactly.
bigger participants in the market.
Exactly. So it's kind of like confluence, right? It's not only just on the chart, but you're looking at, VIX, the volatility index, fear versus greed. You're adding the outflow, and then your setup. If all three line up, your your position's most likely gonna hit in your favor.
Yeah, for sure. And we saw that today, right? I mean, the Q's another insane rally, and I was able to just take these puts and sit, right? Just watching the EMAs and riding that
Exactly.
trend, not trying to fight or time the reversal. Sweet, man. Yeah, so I'm gonna implement that more. I peeked at it this morning, but it wasn't something that I really took into account, right? Simply because I just didn't know how, it was
Yeah.
really how
Now
to
you
how to
know, bro.
use it.
It's important, bro. It's really important.
For
I'm
sure,
going to
man.
break up.
Dude, like right now I'm on 104 days of consistent green, and I really really attribute that to that net inflow, tool kind of.
Oh wow, okay. And congratulations, dude. I mean, you definitely deserve it, right? I mean,
Thank you, bro.
one of the hardest working, traders, and very admirable, because of that work ethic and that flow, right? Because the thing that I've come across is that everyone has it inside of themselves to be able to be successful. Not just in regards to trading, but anything in life, right? And what I've learned a lot from Bullshark is positivity, not engaging in the bullshit or the mess or this or that, right? And just coming, every day at the desk and handling business, not,
Every day, bro.
yeah, every fucking day, I mean, that's what I do,
Yeah,
right?
man.
And that's why, I've aligned with a lot of these, the traders, especially Bullshark, that, take this very seriously because I myself take this very seriously, right? It's, real recognizes real.
Hell yeah, man. I appreciate that. Yeah, bro. I remember like back in the Atlas days, I used to DM you and try to learn your like small cap strategy. Like even though I was trading like my large cap options, I've always been good at it. But it's nice to diversify your tools, and it's sick seeing you doing options now too. And I'm glad I can like help you out in that
Oh, for
aspect, bro.
sure, man. And I've dug through your page, right? If you guys haven't, check out. I'll link Bullshark's Twitter, but you guys should check out his Twitter, and he retweeted all his threads. You guys read through those. There's a ton of good information, especially since we're have shifted towards large cap options this past couple of weeks. So tons of beneficial information that I mean, you're really not going to find it really elsewhere, right? Most other people just post the basic kind of ins and outs of what options are, but this is going to give you
No,
a
this is the deeper stuff, bro. I mean,
yeah,
that's the
exactly.
thing, small caps are seasonal. They're cool, they're great, they're awesome. And even small caps with options, fire. But the thing is with large cap options, there's money to be made every single day. So you can always like rely on that.
Yeah, I mean, what I've taken into account is like, trading, even just pulling up, being able to chart the queue the night before in 30 minutes, an hour before open, right? For me, I know that this is going to give me at least 50, 100, 150% of a runner. And that's like having and knowing in small caps, what the runner is going to be that day. So,
Yep.
and I come in each morning, right? We had the plans here this morning, rejecting up here, and then taking calls if we bounce off this demand, and that's easily, setting the plans, getting the contracts ready. That preparation each morning is, something that's very key that you can't really replicate so much in small caps because you have to hunt what's going to run that day.
Literally, bro. Yep.
Yeah.
Facts. And then here's a cool little tip that I do for like, so you know how you scale in and scale out, right?
Yep.
There's a way to do that with options too, to capitalize the best way. And I'll tell you how it is. So I kind of ladder my strikes, which I don't know if you've mentioned to your boys or not, but
Yeah. Yep. Yeah. We did that a
laddering
little bit
strikes
today. Yep. But
very very important because I mean at the end of the day when you're day trading, you're not just trying to collect premium, but in reality you're trying to collect delta. So the thing is delta, okay, the price you're being paid per dollar movement regardless of calls or puts, it's like what you're trying to collect. Now if you realize out the money options have a lower delta than contracts that are in the money, so when you're trying to pick your strikes, you want your majority of your money on those in the money contracts because they're going to follow the chart, closely. But the thing is, you still want to profit heavily on the out the monies. The thing is, with those, you're going to need a bigger movement. So how I do it is I'll take like for example, let's say I'm just going to take base like 100 contracts, right? I'll put like 60, 70 contracts in the monies, and then the rest I'll take it out the money. That way, when my out the money contracts are moving in the money, I'm actually selling my in the money contracts, and my previous out the monies are now my in the money contracts. And the thing is with that is because delta isn't stagnant. Your delta actually goes up and down. As your contract moves in the money, it gains delta,
Okay.
right? So
Yeah.
now you're able to profit on those out the monies even harder, right? And collect delta that way. And it's the same thing with the expiries too. You know, if you want to swing it from a day trade, you want to take like further out the money on your further expiry. You know, one, to limit your risk, but two, because you can capitalize delta over a longer period of time and scale out of your in the money weeklies and take the money then and there and, you know, ride out the rest.
Okay. Yeah, that's a great concept, right? I mean, because I didn't think about it that way, right? We want to collect not just the premium, but we want to make and collect that delta, right? And the delta increases on those out of the monies once they go in the money. Is that right?
Exactly.
Okay, cool. Yeah, and I try to have that plan here, and I didn't want to, overcomplicate what I was doing, right? I had 398s, 396, 395 puts if we were going to reject off of this, but I ended up just holding just the 398s, right? But I could have laddered and capitalized on that much more, like you were saying, right? It could have turned my very
Yeah,
good day into an
exactly.
even larger day.
So that's the thing. You know, it's good. The thing is with smaller accounts, it's kind of hard to do that. But in general, let's say you do take a contract, right, and it goes against you at first. That's the perfect time to kind of scale into your other strike prices, right? So instead of averaging down the strike you have, it's better to take the next strike out and pick up those contracts for even cheaper than they already are. And then once they start going your way, those are the ones that are going to pay you the most, just
Okay.
because they
Wait,
regain that delta back.
wait, sorry, you cut out. What did you say? There,
I'm like,
I caught the last part was the ones that you're gonna gain the most from.
yeah, so you're pretty much trying to regain that delta. So instead of averaging down your calls that you already took originally, you take the next strike and try to regain the delta as it's coming back in your favor.
Okay, yeah, that makes sense, right? And that's kind of like from a small cap perspective, that's like scale, adding to a winner, right? But it's
Exactly.
much more complex and options in the fact that we have to deal with delta and taking different strike prices and stuff like that. But in that way, you probably turn what would be like a one times kind of gain into like a three times gain, right? Because you're collecting that delta on the way down. So. But dude, that's awesome. I'm gonna
Oh
try to
yeah.
implement that. Tomorrow might not be the best day just because I don't know. I feel like we see some weakness in the market tomorrow, simply due to the fact that we have Thanksgiving the day prior. A lot of market makers and high volume participants are gonna take off early, and we have the half day on Friday. So of course I'm always gonna take into account the chart in front of me, but I think tomorrow we see more downside, right? On the Qs, I was noting on the daily, right? We got that big rejection candle yesterday, that inverted hammer kind of look. And then I found another one from 928 on the daily. And that first kind of day, right, of that big sell off, it gave us 3 or 4 days before we saw any kind of rejection or reversal.
So one thing you have to realize with, I don't know, indexes in general, especially with QQQ, bro, it's built to go up,
Right, yep.
right? So that's like the one thing that I never swing is these type of indexes. Unless it's extremely sold off, then you can even play a better one. Okay, I don't know if you've heard of TQQQ.
No.
So TQQQ is a 3 times leverage version of QQQ, right? So it's nice to swing that because you're going to make the most on it, not just because of the delta, but because of the leverage, right? So like 1% move on the Qs would give you like a 3% move on the TQQQ,
Okay.
right? So if it's really, really oversold, it's nice to swing a longer contract on the TQQQ out the money. They'll be cheap, and then you'll gain like a motherfucker as they're going back up.
Right, okay. And that goes the same, right? If it goes against you, then you're losing 3 times as much practically from the Qs.
Exactly, but that's the
Okay.
thing. You're kind of hedging by taking the further expiry, so you don't lose as much on it.
Okay.
But but you can size up because it's such a far expiry and because of the leverage.
Sweet, man. I really appreciate that because I didn't even know that, or I haven't even really dipped into swinging options. Really just day trading, flipping premiums for the most part. But it is, I know that a lot of the money is being made, from swinging these options, knowing that Tesla is going to reverse, or this ticker is going to reverse this or that, right? Instead of having to come and day trade. The high percentage is nice, but like you said, you're able to hedge and take a further expiration, possibly with a little bit larger size.
Exactly. And that's the thing, when you're trading the weeklies, you already know you're going to get a bigger gain on it. So you don't even have to size up on it. But when you do want to put some size, it's nice to take the further expiry because then you're like, again, you're hedging, you're taking that safety factor and getting paid less. But since you're on size with it, it's like taking a weekly. It's the same thing. You're going
Okay.
to get paid a lot.
Wait. Sorry, you cut out. You said it's like taking a weekly and
Yeah, like sizing on a further expiry is like pretty much the same thing as taking a small size on a weekly. They pay the same,
okay.
except you get the safety factor of low volatility.
Right. And how far out typically are you looking? I know that
Yeah, I go 1 month at least.
1 month at least. Okay. 1 month.
Like 30 GTE. And
At
that's the thing
least.
with the strikes too. So if you look at like like contracts per expiries in general, go look at only weekly contracts versus monthly contracts. Like for example, November 19th that we just passed by. The next one's the December 17th. That's a monthly contract. Those specific dates are always gonna have like more open interest and volume compared to other like dates. Why? Because they're the monthlies. Even if they're not 30 DTE at that point, at one point they were 30 DTE, right? So those are always going to have the highest volume and OI comparatively.
Okay. And I mean, I'm looking here, right? It shows a bunch of weeklies on this, but would I be looking at quarterlies? Is that right, or
Not necessarily quarterly. Yeah.
or
So
just,
is
or
that
I mean, these
the
may be
December
weekly.
17? Look
Okay,
at the
just
December
okay. I got
17th.
you. Yeah, right here.
Yeah. So the thing is, a lot of stocks don't have contracts that expire every week. They don't have weeklies. There'll be only monthly contracts. Like, there'll be November 19th, December, January. And so you want to align those dates with like, even if you're not trading that ticker, you're going to realize that the most movement is going to happen on those certain dates or, coming up to those certain dates. So again, it's less relevant towards large caps, more relevant towards like the mid caps and smaller caps because you want those, the volume and open interest is going to give you liquidity, right?
Right.
And you need that, and it'll align with your large cap trades too.
Okay.
Yeah, and then now that you're on this trade tool, there's a really cool thing. I don't know if you've used it before. So right under this tab, you're opening up the options chain, right? Go down and click options, times, and sales.
Oh, okay. I didn't even see that.
Yeah, dude, this is your tape, okay, for
Oh.
options. So now, like, change the ticker. Put like, for example, like I don't know, DDD.
Okay. DDD.
Yeah, this is like a 3D
Yeah.
printing
3D.
company.
Yep. And then options, times, and sales.
Yeah,
So this is the tape right here.
this is the tape. Okay, now there's two. So it says today's biggest, and then the one that says time. Double click the quantity on time.
Oh, on
Quantity.
time. Okay. Quantity right here.
Yeah, the lower one, the one under that.
Okay. Right here. Okay.
One more.
Oh, right here. This one.
Yeah, double click that. That shows you the biggest orders that are being placed today, and it'll tell you what strike and what expiries that they're taking.
Okay. So right here it says
Yeah, you see how it's puts heavy.
Yep. Oh, yeah, I do see that. Okay.
Yeah. So now that gives you like an idea of where like the sentiment for the stock is per expiration, right? So you can see in the short term, those are all November contracts. On November contracts, they're weighted heavily on the put side. And then you can see like, oh, if you go further out, like those Decembers, those Januaries, those are all calls. So in
Yep.
the
Yeah, I
short
see
term,
that.
it's bearish. In the long term, it's bullish.
Right.
And
Okay.
again, the tape can change. but this just gives you an idea in the short term, long term, where the stock people think it's gonna go.
Wow, yeah, that's a really good tool to have because then that
Hell yeah,
that shows you short-term sentiment and long-term sentiment, right? There's not very
exactly.
many puts further out, but for the time being on these weeklies, with what's happening with the Qs and
hmm
SPY, right? We're
And this
trending
is really
down.
useful for swinging too, because now like, oh, if I want to take a swing, I should definitely go out to a further expiry so I don't lose money in the short term.
Damn, dude, this is so. I
Yeah.
mean, I feel like each day it's just a fresh start, right? And just learning
This is
options,
why
but
you have me, bro.
oh yeah,
Like,
dude. I mean, yeah, and I couldn't ask for better friends, right? You, Ion, Rhodes, everyone. And
hell yeah.
that's what the community is about, right? Just being,
Yes, sir.
helping each other and bringing each other
Try to
up,
make
right?
money together, bro. It's not us against each other. It's us against the
Oh, for
market.
sure, dude. And there's plenty of room at the top, and we all should, try our best to bring everyone up
Oh
as
yeah,
best as we can.
exactly. Now go up real quick. There's another tab. Today's option statistics.
Okay, right
Right
here.
on top of that.
Yep.
Yep. This shows you the distribution. Look at the calls versus puts being opened today.
Well, let me write
Like
this down.
today's volume.
Option stats. Okay. Okay.
You see?
So go ahead.
So now you see how you want to be looking at that today's volume. Today's volume shows you that it's 3 times the amount of calls as it is puts, or double, pretty much.
Oh, total volume right here.
Exactly.
Okay. Yeah. Okay. So more calls and puts for today.
Yeah, and this gives you like another sentiment idea of like, see, even though the short term is bearish based off the times and sales, today they're opening in general more calls.
Right.
So
Okay.
usually when you see confluence, like if you see a lot of calls being placed and the short term is a lot of calls being placed, that's when you can ride your calls. It's like it just extra idea, bro. You know what I mean?
Yeah. Yeah. Just more information to base your
Exactly.
idea
At the end
off
of the
of.
day, the ultimate thing is price action. Nothing speaks louder than price action. This just gives you an extra idea, an extra thing to look at every day to know, like, hey, my idea, my bias is being validated based off the overall like sentiment.
Yeah, and that's very smart, right? Rather than just taking something, throwing it, and seeing if it sticks, right? You have to, especially if you're going in with larger size, right?
Exactly. You
you
need
know,
to. You need to
yeah,
use
you
this.
have to be able to have this because, just because price action saying one thing, we also need to trade with that order flow and, what kind of direction um, larger participants in the market are trying to trade, right? Even though that this says calls and then all day, right? We've been in this downtrend, they're trying to soak it up right here, which I do see, right? Noted by this little zone.
Exactly.
But
Now you know that they're actually buying that zone rather than selling that zone.
yeah, exactly. Because there's almost 3 times or almost twice as many calls than there are puts right here.
Exactly.
So
So
is that on the Q? Is that on the Qs as well? This whole thing?
the thing is, the
Oh, okay, I
larger the
see.
cap, the harder it is. It's gonna be usually split
Where you
when
said
it's
the larger the what?
so like notice how the calls are really heavy right now. Actually, it's pretty more on the put side, no?
Yeah, yep, yeah, twice as many
Yeah.
puts.
Yeah, there you go. That's your general sentiment for the days. They're on the put side. Now, if certain names are usually always split. Like I think Tesla right now should be on the bullish side, but it's usually like 50-50.
Okay, yeah, let's pull that up. Yep, yeah, about 50-50. Yep, about
Yeah,
100,000 contracts difference.
yeah, and that's nothing for like a stock like this.
Yeah,
You know,
Tesla's a monster, and
yeah, so
huge cap.
that's the thing. The larger the cap, the more like evenly distributed it'll be. But then the smaller caps, the mid caps, especially relevant. Like we're trying to make money on growth stocks too. And like, why take commons when you can take the options? You can just take the longer term option swings and validate your direction based off these two little tricks.
Okay, yeah, I mean, and I'm looking here like Twitter, about a mid cap, right? Much
hmm
less on here, but I can see kind of longer term. I see more calls than kind of puts, and
Exactly.
the
And you
calls
see
having
like the
longer size.
Januaries, exactly. They're longer on the Januaries than they are on the Novembers.
Right, yeah, short term, we're looking bearish for the most part, but yeah, long term, I do see that, right? 585 here.
And this is really nice to know, like, okay, like let's say a stock gets beaten to shit. Like, for example, I've been looking at Square Cash and I've been looking at Snapchat. They both gap down pretty nice. And PayPal too. and like trying to time that bottom reversal, this is going to be like one of your number one tools to do that.
Okay, yeah, that's sick because then you know where that larger kind of those buyers are or sellers.
Yeah, you look for the big orders and you look for which expiry and which strike that they're hitting at.
Right. So I mean on SQ obviously, you're bullish towards January, December it looks like. Based off of this, I mean not yourself, but reading
Yeah,
from
yeah,
this it looks bullish, right?
exactly. And it tells you literally the quantity and the premium price that they're paying for it.
Yeah.
So like notice how they're paying, like they took 1,000 quantity at 22.75. That's a huge order,
Yeah, that's like
right?
I don't either 2 mil or 200K. I think it's 2 mil. If it's
It's 2 mil, bro.
yeah, 2 mil, yeah.
So there's 2 mil on the put side, and like even though the quantity is the same for the call side, the premium is a lot less.
Right.
So
And
you want to
those are the
always
same
plan.
expiry. Okay, so what does that tell you normally when the puts are
So
higher premium?
usually, so when the quantity is usually the same and they're on the same, like they both bought it on the Amex, right?
Right.
That's the same guy opening that, and look at the time that they put that order.
Time. Oh, right here. Oh,
It's
the same.
it's the same
So
person
what? So
putting.
what is he? He's hedging right here. Is that what he's doing?
He's hedging. He's taking a straddle on it, the long term straddle.
Okay.
So like I was saying, you can take both the call and the put, and whichever direction it takes, you close out the other one for a small loss and you ride the other one,
Right.
right?
Okay.
So this guy is taking both and saying, if it goes my way, I'm gonna get paid. If it goes against me, I'm still gonna get paid.
Yeah.
Right?
Exactly.
And you'll usually see like the market makers or the bigger orders being placed like that.
Yeah, because I mean that's a huge. I mean that's 2 mil, and then this is 1 mil right here, 935K.
Exactly.
Yeah.
So
So
that total order was around 3 mil that he put on the board, and even though it is more on the premium, it's the same person doing it. So that order is kind of like, yeah, it's sick, but it's irrelevant to me.
okay, and then he chose the same strike price. So what is that? So
Yes, the straddle. So basically, there's different option strategies. A straddle is taking the same strike price for like the same date, right?
okay.
So like this the same exact strike. And then a strangle would be taking different strike prices and trying to align the premium. So like if both showed like 935 for the premium, but a different strike, that would be a strangle strategy.
Okay, strike and strangle, or straddle and strangle. Okay, that's something
Mm-hmm.
that I need to kind of review this weekend. But shit, man, I mean that's amazing, right? To be able to kind of have that further confluence, right? Instead of like trading commons, you don't really see stuff like this.
No, you don't see stuff like that, bro. This is like the extra information that gives you the edge. At the end of the day, we're trying to find the edge, right?
Yep. Yeah. Exactly.
This is your edge, bro.
Fuck yeah, dude. I mean, I'm excited because I mean, I've just been trading small caps pre-market, right? But every single day, just going straight in QQQ, hammering it out, trying to master, and kind of develop what my option strategy is for day trading, right? And I didn't have to change too much transitioning over from small caps, but there's still, I mean, in any market, no matter what, however much experience, right, I'm always going to be a student. Being humble and being open minded towards things. For me, especially in the stock market, there's always something to learn.
Oh yeah, bro. And that's I just like you've been doing small caps for a long time. I've been doing options for a long time.
Right.
At the end of the day, the ultimate thing that speaks is price action. So learning price action from a small cap coming into large cap, it's easy for you because you're already used to how the stock is supposed to move. Except there's no random knifing. There's no huge insider buys like that. Everything it's evenly distributed, and price action speaks really fucking loud on these.
Yep, exactly. And it really does. I mean, because that's the one thing with me with small caps. There's so many shady things that, the only reason why I survived for so long or was successful was because I was able to read, what the VPA was telling me, what these candles were telling me. And all that is displacing that dialogue that, where bears are selling and where bulls are buying. And, I need to be able to place myself within that trend.
Yeah, and that's the thing with the small caps. Volume is like it's your number one best friend, right? But on
Yeah.
large cap, the volume is so big, it almost doesn't even matter.
Yeah, I haven't really looked at it or paid attention.
You
It's
don't
been
need
so
it.
clean to be able to just trade the candles, because that's my
Just
favorite
trade.
thing. It's just trading those candles in and out, drawing my zones. I don't. Do you use supply? You use supply and demand? Did you say
You don't
or?
even need it. Bro. You
Oh,
don't need
okay,
it.
okay,
That's the thing. Like supply and demand, yes, it's respected, but at the end of the day, like this is the order of things that I look at, right? Price action first, then my EMAs, okay, the 20 and the 200, VWAP, of course, and then I look at the inflow outflow, that Webull tool.
right, yep,
Yeah, and then I'm looking at VIX, the Fear and Greed Index,
okay.
and then I'm looking at these large scale orders.
So how do you watch VIX? Like, what does VIX tell, because I understand normally that what I've, heard from, just being in real ones kind of options for, right? Eric was talking about, when VIX is spiking up, normally we see more selling pressure, right? So, I don't know how valid that statement is, but, what does the VIX tell you when you're reading it?
Now, open VIX,
Okay.
go to the daily. Okay. So generally, when VIX goes over 19, you're in bearish mode.
Okay. So let me mark that. Oh, shit. Okay. VIX over 19, bearish.
Yep. And then VIX under 16 is your real bullish.
Okay, under 16, bullish.
Mhm.
Sweet.
Anything in between is chop.
Okay, anything in between chop.
Yeah. So right now VIX is above 20. That's bearish, bro. That's ultra bearish. So for me, like opening up a position here, yeah, it's cool, but I can't hold for a bigger move. Anything that I play, I'm scalping when VIX is this high, right?
Right.
Just because it's gonna give me chop in the market. Yes, I can play stuff, but I'm not gonna hold it for longer.
Yeah,
When
they should
VIX
just be
under
scalps.
exactly they're scalps. So when VIX goes below that like 17, 16 level, then I know I can hold stuff for bigger moves, right? So under 16, I'm more calls heavy. Over 19, I'm more puts heavy.
Okay, yeah, that makes sense because I needed to understand from someone not just an over the top like Google kind of thing, but
Yeah, no.
like how someone who uses VIX and trades VIX every day because I understand the importance of it, right? But it's really nice to kind of hear your perspective on the VIX.
Yeah, and then you can hedge your positions using VIX too. So there's another one similar to VIX called UVXY.
Oh, yep, yeah, I've heard of UVXY.
Yeah, yeah, the UVXY. So UVXY, it's very similar, except it has a really nice
I
options
love
chain.
you, bro. You Vixie, bro. I love you.
Yeah, UVXY is great. So the thing is, like, let's say I'm like really heavily leveraged on call side. VIX can spike at any time. Like no matter what, it can literally go from 16 to 20 in a day. If something happened, like I don't know which day it was that the China housing thing. What was it called?
Oh,
What was that?
Evergrande?
Evergrande, bro.
Yeah.
On that day, you had a crazy spike in a day, bro. Literally in a day. Like it gapped up like crazy. So that's the thing. If I'm really heavily leveraged when VIX is under 16, 17, I can swing UVIXY, calls, which I'm saying there's gonna be fear in the near future. And when it does pop, those pay me like crazy and they cover my losses on my other long calls.
Right. Okay. And when you say leverage, that's just like when you're hedging, right? When you're playing both long and short, just trying to be able to
No,
balance.
not necessarily. Like let's say I have like 70% of my portfolio in long calls, in different stocks, right? Like you're pretty much butt ass naked sitting there waiting for something to happen to you. Yes, you can get paid a lot, but you're exposed, right? So the way to cover that exposure is to take that UVXY. You're probably gonna lose on it, right? But the thing is, if and when it does spike, they're gonna cover you like crazy. They'll cover your losses and they'll give you some.
Okay. Okay. Yeah, that's good to know. So, just kind of
Yeah, I mean, a lot of people
not
don't do
not
it.
keeping your neck out. You know, you're having some
Exactly.
sense of
That's
cushion
all
if
it
it
is,
does
bro.
go in the
That's
opposite
just your
direction.
cushion, bro. It's your cushion.
Okay, sweet. Yeah, because I've heard that term plenty of times, but I never really understood. When I mean, I understand the basis of it, but when someone says leverage, I want to be able to understand that to the fullest extent.
Yeah, yeah. And then I don't know if you've used options profit calculator.
No, I need to. Yeah, I listened to your Trader Babes podcast, and you were talking about that, and also in
Yeah,
whatchamacallit, in a 100 stream as well. But let me pull it up. What is it?
yeah. I'll
Options
show you. Optionsprofitcalculator.com. I'll show you how to use it too. It's quite easy.
calculator.com. Okay, I'll pull it up on stream.
So yeah, so like let's say you're gonna go call, right? Go long call. Put in the stock you're looking at. Let's say it's like Snapchat, right? Okay, get price. Then you click select option and you pick your strike. So let's say I want to swing long calls on it, right? Let's say January. I want to give it some time to fulfill. So click the January up top. Right there, January's.
Oh shit. Okay, got you.
Okay. Now you pick your strike, right? It's showing you the bid, the ask, and the mid. Usually click the mid price. So let's say I want to swing the $60 strike, right? At 152. So you
Okay.
click that. Okay. Now you go down and you put your like price target where it says auto. See where it says auto? Stock price range.
Okay. Stock price range. Oh, auto. Yeah, right
Yeah.
here. Okay.
So now let's say I think that Snapchat can go to like $70 by January.
Okay.
On the other side.
Oh, okay. I got you.
Yeah.
All right. 70.
Now click I agree to terms.
And then
Okay. And
calculate.
right on top, there's on the bottom, there's more output options. Click more output options. Okay, and change that percent of maximum risk to profit loss dollar.
Got you. Okay.
Okay, now click calculate.
All right. And then this pops up.
Now it gives you a price by time distribution to know what price you need by what date in order to stay profitable. This basically calculates your theta for you, prices it in, and tells you, hey, like, let's say Snap doesn't move at all. By every day, you're losing this much on your contract. So, like, for example, on this specific one, by December 7, Snapchat needs to be at 52.50, okay, for you to
Oh.
break even.
Okay. Yeah, I see how that works.
Yeah. And then it tells you, let's say Snapchat does hit $60 by December, 21, let's say. So go to $60 by December 21.
I think that's right here, and then
So
December.
if it does go there by December 21, you're gonna make 140% on your 150% on your contract.
Okay, and then making $228, right? And this is so
Making
this is calculating theta. I don't have to worry about,
Yeah, you don't have to exactly. This
Okay.
calculates your theta and your delta together.
Okay, sweet.
Mm-hmm.
Now,
So this is like
you're using this solely for swings. That's right.
not solely, but like let's say you don't know how to calculate delta. I mean, calculating delta is very easy. You look at delta price, right? Let's say your premium costs 40 cents. Okay, you pick up something at 40 cents. If you have a delta 4, you know that for every dollar the stock moves up, you made 100% because you're getting 40 cents per dollar movement up at a premium that costed you 40 cents. You made 100%,
Right.
right?
Okay. Yep.
But for swinging, it's a little different because now you're calculating in theta, right? So this is the way to price in that data. But look, if you don't know how to calculate delta, you just come here and you look at the day that you're trading. So for example, today's the 23rd. You go to the 23rd and you know what you'll get paid if Snap moves to a certain price, right?
Right. Okay.
So like this is how you know how your options will move. So like this is a way out the money contract. It's a $60 strike for the January. So you know that if Snap goes down to like $49, for example, $49.50, put your mouse over $49.50.
Yep. Right here?
Just today. Just today.
Oh,
Yeah.
okay. Right. If it just goes today, then I'm gonna lose
Uh-huh.
20%
Exactly. So
or
now you know
$30.
based off the underlying chart price, how your option will react to it.
Oh, okay, nice. So yeah, okay, I see that, right? So and that lets you,
It,
calculate your
it it
risk.
helps you exactly. That's how you get your fixed risk.
So normally as well, coming from small caps, right? A lot of us trying to keep a 10% kind of stop loss, which isn't really it's not really realistic trading options, right?
No, it's
Um,
not.
typically what I've been seeing is, 30% really at the max, but I'm not sized in very heavily. What are you looking at? I mean, obviously we're looking at the underlying chart, right? We want to, our position to be, maintaining a bullish or bearish kind of trend, whichever way we're trading. But typically, what are you keeping your risk kind of management around?
So that's like, for example, last month, my biggest loss was 15%, right? But the way I'm able to do that, because I never add to a winner, okay? Which is kind of contrary to what a lot of people do. I never add to something that's winning because now I'm changing my fixed R from my entry,
Okay.
right?
Yeah.
But I save that money for when it's losing. I'm averaging down to certain key levels. So like, let's say I'm gonna just example. Let's say I'm gonna put $1,000 into a position, right? That's gonna be my full size. I'll take like $250, $300 as my starter. If it goes from there, cool. I'm playing $300 like full size, right?
Right.
But if it goes down, now I have an extra $700 in powder to be able to average down and keep my cost basis low. So when it does go back to my starting price, I'm already up on my position.
Right. Okay. And that's nice because I don't want anyone to be confused, because we talked about laddering, for the people that are watching, right? Because laddering's different. Laddering's taking on a new position and making sure that that position is staying within our low risk, rather than taking, like, let's say we have an entry here on these 394 puts, right, and then adding up here on this spike down. I mean, this is a spike up, but price action would be spiking down. Then our average gets messed up, and then we're not trading our plan anymore, right? Because our average would have been 180s, and you buy up here, now our average is over $2, this or that. Now you're sitting through the chop. Now you're sitting through. I don't know if this is gonna go my way or not. When we should have just maintained, our original position and plan down here.
Exactly.
Yep.
So yeah, I hope that was helpful.
Oh, dude, very helpful, very very helpful, right? Because for me, I've just been day trading, but I know that that's not the entirety of what options are, right? There's so much more to capitalize upon through swinging and these straddles and strangles and other kind of strategy techniques. Day trading and flipping premiums is just scratching the surface on options.
Yeah, man, that's like the base end, bro. It's like the same thing as trading small caps. You buy and sell. You're just selling the premium.
Yep. Yeah, exactly.
Just,
And that's what I was confused. I was really shied away from it because I just didn't understand it. I was holding on to my bias so much. But dude, it's like you buy, one of these contracts. Let me put this away, right? On the Qs, let's just say a contract is like $80. That's like buying a stock price at $80, or it's like buying two $40 shares or something, right? People trade Mara, Riot, Sava, a bunch of different higher price tickers, and they'll trade the commons. And one thing that really stuck with me, right, when you're trading small caps, let's say something's $100, it moves $5. It's not going to do very much. You made $5, but if you move $5 on an options contract, that's an insane move, right? You said that in the Trader Babes podcast, and I think on hundreds. And for me, that's putting in more value for my time and my efforts when I'm taking these trades. Because you're going to get paid a fuck ton more.
hell yeah, exactly, bro. Man, at the end of the day, you want to be taking, the highest probability, highest profitability, lowest risk trades, and this is the way to do it, bro.
Yep, exactly. But yeah, bro, I really appreciate you coming on. Really unexpected, but dude, it was really nice to. I think this is the first time we've actually spoke to each other. But
Yeah, man.
yeah, but
True.
I
I mean,
really
we did up, bro, but I needed to hear your voice, bro.
no, all good, brother. I'm totally down with anyone who's puts out positive energy and really helps the community. But I really appreciate you coming on, bro. What are you trading right now? You chilling after this morning's
I'm mad chilling right now. I have 0 positions
dude?
open. I'm already up nice on the day. I'll probably take another position soon, but it's just not lined up right now. There's right now, I'll tell you exactly. Since we've been talking, there's even more outflow, bro. When I was talking to you, when I just got on, there was 1.3 in outflow. Now there's 1.7 in outflow.
Wow, so another 400,000
Another
or 400
400,
million, 400 million because it's in the billions,
yeah,
right?
400 mil exactly.
Wow, that's crazy, dude.
Another 400 million. You have to realize the total inflow for the day is 700 mil, bro. Like,
Yeah,
and there's no reason to fight the chop. I mean, like, for example, yeah, look at QQQ. You know what I mean? It shouldn't be doing what it's doing right now based off that outflow,
right. Yeah,
right?
but we've been
Reality,
sitting in this channel, 394 to
exactly.
396 for what about
In
two
reality, it
two
should
hours
be a
now?
lot lower, bro. It should be below 390, 345 just based off the outflow. But it's not. There's no confluence for me to capitalize on. But
Right.
in the moment, there was a lot of confluence.
Yep. Yeah, that reject off 400, that key kind of mental psych,
Exactly.
that
That's
was
another
a
risk spot. This spot, if I take puts, my gain is a lot lower than what I'm trying to risk.
yeah, exactly, right. You probably, 1 to 1 or even
Yeah,
possibly
it's
even
just,
less on that. Because we are
yeah,
getting little pops up, right? And those little pops up might scare some people, right? I mean, not traders who are more experienced, but trading this right here, it's best to just wait until the true trend either one breaks out and we get a big dump, like we did yesterday, towards close. This big
yeah,
kind of bearish look to it. But right here, I'm in the 394 Ps from much lower, about 160s, but it's been a grind just to even get this, and it's
exactly.
only
Yeah, I
like
don't want
50
to fight
cents.
for it.
Yeah, but I've been able to just chill. I'm not sized in very heavily, but but I do understand what you're saying, right? There's no reason to put your neck out if the market's not showing a true direction. Even though the outflow is higher, the sentiment is bearish. It's not being displayed in the market very much. Look
Yeah,
at
and I was gonna say another thing is like you have to understand that any of these stocks, especially the indexes, have a certain range, bro. Like a daily max gain, a daily max loss. Usually, any of these indexes don't want to go more than 2% on either way
yep,
in a day. So you have to realize this stock is already down like 1.3% on the day. Yeah, it can go more, right? Which it probably will go more, but the gain that it's going to come from is not worth it for me. Compared to, let's say, if this was tomorrow or yesterday or Friday where you have 0 DTE contracts, those contracts are going to move nice on me enough to pay me enough to actually take that risk factor. But today there's no 0 DTE contracts, so it's not necessarily worth it for me to capitalize on like the next expiry. I'm going to have to size up on it, and I don't want to put that risk on the table.
yep, exactly. Put your money where it's rather safe for in regards to price action and what's consistent and gonna fare you well, right? A lot of the time, people trading this chop, right? It's either greed or just just blindly taking a position.
Exactly. This is chop zone, bro. There's not like right now. If you're in a position from like a previous spot, it's fine. But opening up a put right here, super high risk. You
Yep.
can get a reversal at any time. Like yesterday, you saw like out of nowhere, we just flipped and then we dropped way later on in the day.
Yeah. I saw this big. We were coming down super fast, and then we saw this big rejection wick. And then we saw two of
Yeah,
them. So then it
exactly.
takes an immense amount of buying pressure in order to stop a violent move like that. And we kind of saw that today, right? Big violent move, and then we saw a bottoming wick here from the zone that I had.
Yeah. Check out BA. I took a nice short on BA today. It was the same exact
Oh
setup as
wow, yeah, yeah. This is
same
clean,
same
dude.
same exact setup.
What contracts did you take? I'll pull it up.
I took the 205s, which was a little out the money because I expected a bigger move, but it moved nice enough that it was worth it.
Oh yeah, I mean look at that. 50, 60 cents right here. On a
Yeah,
that's 100% move. Even more if you're laddering them.
yeah.
Along the way.
I took around 70, 65% on it, and I closed it out because I was on size, and then that was good enough for me.
Yeah, exactly. Yeah, I mean, I'm slowly adding some tickers to the belt, right? I think I'm gonna focus on maybe AMD and Facebook coming into this next week, um, and just kind of get a feel, right? I know AMD follows QQQ very closely, but Facebook, I want to be able to dive in a little bit more and just kind of understand.
Hmm. And now there's also level 2 tape for this too. So now look at BA and look at the level 2 tape and tell me what you see at the 208 price.
Okay, let me see. On VA, you said?
Yeah, you're gonna see a block.
On the you said the 208 price? Wait. Say that again. Sorry, what am I looking for?
Okay, okay, this is how I look at it. So like go to Webull
Okay.
on your Webull.
Yeah.
Okay, pull up BA
All right.
and scroll down. You'll see order book level 2.
I see order book level 1. I don't have here, I gotta subscribe to I don't have the level 2 on there.
Yeah, that level 2 is really nice, bro.
Yeah, let me add it real quick. I think what is it? Yeah, the $2 a month, dude. What am I been doing?
Yeah.
Okay, there.
Okay.
Let me
Now you'll be able to see that level 2.
let's see, level 2.
Yeah, and look at the $208 price.
Hold on, I think I have to close out of my app real quick. BA. All right, there we go. 208. Oh yeah,
Yep.
I see that 10K.
Yeah, there's
10.6.
10.6K block order on BA. So for me, even though I see this as bearish, I can't go against this because I know at 208 people are gonna buy it like a motherfucker.
Yeah,
And it's just
exactly. There's no meat left on there.
there's no meat. So this is like another thing I look at. It's like the level 2 tape when you just see like giant weight on the buy side, and even though you want to go short, it's more than likely not gonna go down there to not fill that order.
Yeah, well, that's all. I mean, because like normally I use level 2, like just for day trading and stuff. But digging deeper and seeing those big walls, and adding that confluence towards, your
Exactly.
decision, that's huge.
It's the wall. That's right. And it's hard to go long on it because it's a bearish setup. So for me, what do? I don't touch it.
Yeah, you just wait, and that's what I got into trouble yesterday. I came out really green, but I gave probably a third of it back because I was trying to pinpoint reversals, this or that. When I don't, that's not my job in the market, right? My job in the
No,
market
bro.
is
You
to
play it as it
react.
comes.
Yeah,
Exactly.
exactly. To just play to react and trade with that bigger money because in reality, we're just little pawns, little drops in the bucket compared to these large whales.
Bro, you don't even know. Like, for example, last month, bro, across every single play that I took, I was at like a 95% success rate for every single play, day trades and swings. And the reason I was able to do that was because of this certain set of parameters that I look at every day and making sure my setup is actually valid and I'm not just chasing like a chop zone.
Yeah, exactly. Because I mean, through that, a chop zone. I mean, I know you and I probably wouldn't experience this, but once you get in that chop and it goes, you might take a tag like a loss, or you might average down, or just take things, take entries with haste. And once you start to get in that kind of like, sporadic, kind of hasty, and panic mode, that's where those big losses come from.
That's exactly right, bro. It's so easy to make gains, but it's as easy to lose for options, bro.
Oh yeah, I mean, some of these contracts they go worthless most of the time, right? If you have the wrong
90%
sentiment.
contracts go worthless by expiry.
Yeah, that's crazy.
So these things are built against you, bro. They're literally built to take your money. But you got to use them in the right way to cap.
Yeah, exactly the matter, right? And greed is a huge kind of aspect of that too, right? They're built to take your money, and they waive that high percentage kind of gain that's possible, right? You go on Webull right now, you click on the options chart on something, right? Either way, it's going to show you, 100%. You know, sometimes I see 2,000% gainers on the Webull options chart, right? And that's like advertisement, right, for newer money. And you know, it's the market, and especially options, like you said, are built to for you know retail traders to lose money.
Have you experienced implied volatility yet? Do you know what that is?
No, I know like if we're it's buying too high, like if we see like a strong kind of movement in one direction, then the IV will spike up. And then that's kind of where people get into trouble, like you know, trying to pinpoint of a reversal, but the implied volatility is high. So then like it may be moving in their desired direction, but then you know their contract's not moving, you know, towards a profitable, or it's sitting kind of stagnant. But I'd really love to hear, you know, your kind of you know explanation on
Yeah,
IV
I
and
will. I'm gonna make your day. I'm gonna make your year right now. I'm gonna make you a better option. I'm gonna teach you something that no options trader talks about. Like, go across any Twitter page and you won't see not one person talk about it because they don't know how to talk about it.
right.
Okay, and just give me one moment, all right?
Yeah, you're good, bro.
Gotta chime in. This is insane. Oh man.
Oh, I know, right? Yeah, I mean, I did not even expect this, right? Bullshark just came in and he's showing love, you know. So
Bro, I'm in a small cap trade. I'm about to close this shit out so I can take my notes
yeah, dude,
properly.
I got
please, yeah, you guys,
goosebumps.
please, you know, please follow Bullshark on Twitter, man. Like he's the real deal, you know. Like
He's goaded.
yeah, no cap, like this dude, absolute monster when it comes to options.
And I think he's Santa Claus because he just swung by and started dropping dimes.
Yeah,
I
exactly.
taught, bro. You don't realize a lot of these small cap traders that you see doing options now. They came to me to learn. Like me and Rhodes were never really friends. Like, we knew each other from Atlas back in the day, and then when he just appeared out of the blue, I hit him up like, "Yo, you're gonna trade with me or what?" And then I sat down and I taught him options, and then I taught Santa the same thing, Ace, all those guys that they're great small cap traders that have a great understanding of price action. I just showed them these little tools that they can cap on. Now they're doing fantastic, bro.
Yeah, exactly. You know, I think Rodessa's only been trading options like what 3 months, something like that.
Less, bro.
Yeah.
Yeah, bro. I
And
literally hit him up. We hopped on a call, and I showed him. I showed Scalper Ryan too.
Oh yeah, yeah,
I love Ryan.
yeah.
Yeah, Ryan's awesome
Yeah,
too.
he's a good guy.
Yeah, he's a workhorse.
Sorry, I'm putting coals for my hookah. One sec.
You're all good, brother.
Bro, that's the life right there.
Yo, what's up, Lasky? Good morning, bro. Or good afternoon.
Okay, let me make your year, bro.
All
So
right.
whoever wants to take notes, because it's kind of complicated, but this is gonna change your life. Okay. So let me explain to you how options premiums are actually priced and why they're priced in a certain way. Okay, and this is gonna let you know if you're overpaying for an option or you're underpaying, you're getting them at a discount, and how they'll actually move based off of IV. Okay. So IV is actually like a super, super underlooked upon uh, Greek when it comes to trading options. Okay. So now think of an in the money option. Okay. In the money options have a certain price. Okay. This price is called its intrinsic value. Okay.
Okay.
An intrinsic value for a contract is calculated by one way. It's the price of the current stock. So let's say the stock is at $10 and you pick a $9 strike, which is in the money. Okay. That option premium is supposed to be priced at $1. It's the difference. It's the current price minus the strike price you're taking. So the premium should, in reality, be at $1. Now, that $1 price is its intrinsic value. An option that's out of the money has no intrinsic value. It's because you can't subtract the strike price from the current stock price. You'll get a negative value.
Okay.
Means it's not intrinsic.
Right.
Okay? It actually, in reality, has no value, but it still has a premium. Okay? How is that premium calculated? Now, there's another value. Okay? It's called the extrinsic value. The extrinsic value is calculated based on two factors. The first factor is time, which is theta, right? That theta price, okay, gives it an additional value. Now, contracts in the money have both an intrinsic value and an extrinsic value. That's where that extra premium is coming from. So it would be that $1 premium plus theta, which is the time till expiration. That's why you have contracts with further expiries being priced more than contracts that are expiring soon. Okay. And they have another value that adds on to the extrinsic, which is implied volatility. Implied volatility is actually weighed heavier than time value. It adds more of a value. Okay. So now think of it this way, right? Contracts that are out the money only have that extrinsic value, which is time and implied volatility, right? And since implied volatility is weighed heavier than time, now you have it that a contract with super high IV is going to be priced crazy high. It's that implied volatility that's adding value to those contracts. So now think of it this way. Let's say you buy a contract that's super high IV, okay, and it's out of the money. As soon as that stock starts consolidating or dropping a little bit, the IV is actually going to drop with it. What happens when that IV drops? It's losing that extra added value on the premium. That's why the premium value will drop on you. Even if the stock's not moving, it's holding the same, you lose value, and it's called IV crush. Okay? I'm sure you've heard of that term, but this is basically how it's working. It's you're losing that extrinsic value on those contracts based off IV. So in reality, when you're trying to pick a strike, you want to buy something that's low IV, something that doesn't have that extra added value, right? Now,
Okay.
when you're buying it at low IV and you do get an IV spike, the opposite happens. You add value to that extrinsic value, right? So now let's say you buy a contract that has like 60, 70% IV. Next thing you know, it goes to like 160, 200, 300% IV. Those contracts are going to jump on you. You're getting something that's adding crazy value being added already on to the current value, right? So that's why when you're picking strikes, it's not only that you're looking for a good delta and a low theta, you're also looking for a low IV, right? Just so in the case that you do get an IV spike, you add value to your contracts. And this is especially relevant for swings, right? If you're swinging something that's a mid cap or a small cap, you want to be able to gain that value, right? That's how you capitalize heavily on it. Now,
Right.
on the latter, right? Let's say, for example, someone was asking me this like a couple weeks ago, or like last week or something. I know you guys saw the car run up, $sign car. It ran up like from $100 to like $400, right? Obviously, you know that thing is gonna come down at some point.
Yeah.
But why wouldn't you play the puts? Okay, when that jump happened, IV spiked like a motherfucker with it. It went from like 70 or 80% IV to over like 400%, 500% IV. So, in the fact that you took a put to try to play the downside, you would get paid close to nothing on that put, even if it did come back to its original price. You would only make like 20 or 30%. Why? That extra IV value that was given to those contracts is now being taken away. So that's ultimately how that extrinsic value for out of the money contracts is being calculated. It's not necessarily the premium price that you're looking for, it's the IV value.
Okay. Yeah, that makes a ton of sense because, that was one thing that kind of made me nervous trading, right? I've heard people, talk about, oh, I buy this contract and it's going my direction, but I'm not getting paid, right? And
IV,
sometimes it even
100.
turns red, right? And that's kind of something that's scary to some people, but easily avoidable because we don't want to buy something that's, has that high implied volatility, right? Like you're talking about, because, you know, in hindsight, like you're talking about on car, that huge spike up, car doesn't belong there. So of course it's, going to come down at some point. So that implied volatility, increases like like you're stating.
Exactly. So that's the point that I'm trying to make is, if you're trying to play a run up and the contract itself has a low IV, it's worth it. But if you're trying to play the downside and the IV has already spiked, it's not even worth taking. It's better to play a naked short, with the actual stock rather than take the put, because now you're not going to deal with that IV devaluation.
Right. Exactly that.
So I
So,
hope that resonates with some of you, because
oh
a
yeah,
lot of
I
people
fill the whole
forget.
page up with notes because that's a ton of, very valuable information that, like you said, I haven't heard anything about, why or how IB was, implemented or created, or
Exactly. It's
or
all
uh,
about
or
the
even intrinsic
intrinsic
or
and
extrinsic
yeah.
value. That's something I'm going to have to really dig deeper in, and
Hmm.
I'm glad that, you brought that up to us because, you know, um, I mean that's so valuable when trading options because there's so many different variables that, sometimes price action isn't everything, like we've talked about, because there is the, IV, theta, delta, all of these different factors.
Exactly. So now here's one more thing. This is the curveball. Okay. So now let's say a stock, okay,
Uh-huh.
has crazy IV. Now the IV isn't going to be consistent across the board. Okay. You're going to have different IVs for different strike prices. Okay. Now there's a way to know how that IV is going to affect your strike price in a certain way. Okay. And it's a Greek. That Greek is called Vega.
Vega,
Okay.
okay.
No one talks about Vega. Zero people. But Vega is my bread and butter. Okay. Now, Vega, okay, the actual Greek itself, pretty much describes how implied volatility is going to affect the premium on your contract. Now, the tip to kind of understand Vega, like to put it in the simplest way possible, a strike that is closest to at the money, right? So either one or two contracts in the money or one or two contracts out the money are going to always have the highest Vega. That means, okay, even if the implied volatility on those contracts are lower, okay, than implied volatility on strikes that are further out, like let's say, for example, that $10, I'm just giving a random example, that $10 stock, right?
Yeah.
If you pick a contract that's like $15 or a contract that's $11, the $11 contract is going to have a higher Vega, meaning that even if the $15 contract was at 300% IV and the $11 contract was at 90, 100% IV, those $11 contracts are going to have a bigger impact on price for the implied volatility than the ones further out. That's because of the Vega, right? The Vega on them is higher, meaning implied volatility will actually give it more added value on those strikes compared to the ones further out.
Okay, so I'm writing this down just to make sure I'm correct. So if the Vega's
Mhm.
higher, then you will see an increased amount of that implied volatility, on your
Effect on
premium. Yeah,
price.
effect on your
Exactly.
premium. Okay, so larger IV effect on premium. And you said Vega has the most kind of influence on those contracts that you said that are the out of the money contracts that are closest to in the money, or did I hear that incorrectly?
Can you say that again?
Vega has the most
Yeah, yeah.
influence on tickers that
That are
or
right
contracts
at the money.
that are right out of the money.
No, at the money.
Oh,
At the
at the
money.
money. Okay. So
The
okay.
one in or one out are gonna have the best Vega.
Okay. So let me change it to an A. All right.
Yeah, you know the contracts we play for inside bars, like those, the ones that are going right in the money, like right there.
Okay, I got you.
So I have a question for clarification.
Sure.
Vega gives implied volatility an even heavier weight than it already has in the.
Yes, exactly.
Okay, gotcha. Thank you.
Yeah, that's why even though you see a higher IV on strikes further out, the ones that are closest to at the money are gonna have the biggest effect on premium for IV.
Yeah, it, like grades it on a curve, basically.
Exactly.
Nice. Thank you.
So you'll never see anyone talking about that. Like, oh, why is the $11 strike only 90% IV, and the ones that are way out the money have like a 200% IV? Why is the ones that are at the money changing the most value? Because of that Vega.
That is a gold nugget of wisdom.
Yeah, dude. I mean, absolutely insane because no one talks about it, but it holds a lot of weight, holds a lot of value.
Of course it does, bro. So yeah, so ultimately you have to realize that contract prices are being determined on those three values. One being time, theta, two being implied volatility, and three being vega, the impact of implied volatility on your option premium.
Sorry, I'm writing this down.
No problem. And the thing is, like, for indexes, really big stocks, Nvidia, shit like that, bro, you never get IV spikes. Okay, there's just you need too big of a movement, which these stocks don't have within their daily ranges to do that. But for mid caps and small caps, especially if you want to play options, you need to know these things, bro. If you don't know how to do these things, don't even trade them.
All right, so that's mid cap and small caps is really where we have to worry about IV. Is that right?
IV,
Okay,
exactly.
so but these larger like cap tickers, like you said,
No,
Nvidia.
they'll stay under 60-70%
Okay,
always.
is
Like
that the same?
go look at any strike on QQQ right now, it'll be under like 50%, 60%.
Oh shit! Hold on. How do I view that again? Is it Oh, right here. Yeah, it's red, but it says 24%, 25%.
There you go.
Okay,
That's right.
I see
It's
that.
down 1% on the half on a day. Why didn't it move? It's because they don't. They never move.
Right, yeah, that involved that. Yeah, so we don't really have to worry about IV so much on these larger priced.
No, you
Okay,
don't.
on the large caps. Okay, that's good to
Not
know.
at
Okay,
all.
so but
Yeah,
something like
that's
Twitter or
generally
Snapchat, that's where
exactly.
we have to worry about IV.
Oh yeah, like look at DM, the stock DM.
Okay.
Now look at the IV on these contracts.
Oh wow. Okay, that's twice as much on the Qs. Now what's a good IV to stay under, right? Something that you find
So
beneficial.
that's the thing. It depends on the market type. Okay, so this past year, including this year, like 2020, 2021, just because of the influx of traders and the volatility and all that stuff, the general base IV has actually moved up. Okay, like a couple years ago when I was trading, a base IV, like a really good IV, would be under like 60%, 50% was sick.
Yeah.
Now it's different, bro. Now if you're trading and you see under 100%, I consider that good. You
Okay.
know, because you'll see IV spikes up to like I don't know 600-700%, bro.
Yeah, exactly.
So
That's insane, and that's why people get crushed because those are.
that's why they get crushed, bro. It's not because the stock is moving, with them or against them. It's solely based off that IV. It's because IV affects extrinsic value heavier than any other Greek.
So IV affects intrinsic.
Extrinsic,
Oh, extrinsic.
extrinsic.
Okay, extrinsic.
IV and theta is extrinsic, and then intrinsic is only strike price. I mean, current price minus strike
Wait,
price.
wait, wait, wait. Could you say that again? I'm sorry.
Yeah, it's all good. So intrinsic, okay, only applies to in the money. Okay, and that's because it's current price minus strike price. That's the intrinsic value. Then the other added value, which is the extrinsic, is time, which is theta, and the other factor being implied volatility, which is weighed heavier than theta.
Okay. Weighed heavier than theta.
Yeah, and like I know a lot of people say, you know, like they haven't blown up accounts. Like I know Rhodes has never blown up an account. Why? Because he was trading small caps and not dealing with this IV. But you know, me personally trading, bro, when I started, I had a 25K account. I blew it down to like 5K because I didn't know any of these things, and I was just getting IV crushed. I was losing premium on my swings, like all that stuff, and I'm like, you know, losing my mind. Like, how the fuck is this shit going against me? Like, I'm doing everything right, and I'm still losing money. Until I figured out this intrinsic and extrinsic value thing, that's when I turned my 5K to over a mil, bro.
Yeah, dude, and that's insane. And I think that, just that point, like you talking about, failing and failing until you, figure out what you're doing
Right,
wrong.
you
And
realize what you did wrong.
yeah,
Exactly.
exactly. That's the turning point. And a lot of people, they like to think coming to the stock market, hey, what's the holy grail? How can I be successful, right? To be successful, you have to fail a lot. I myself, maybe not have blown up account, maybe have, I mean, I guess, negative 30, 40% is blowing up an account, I'd say. So yeah, I
That
would,
is,
yeah, I'd say that I have experienced that, but being able to come back and not let that loss bog you down, and actually, fighting to figure out, hey, why am I, not profitable when I feel like I'm doing things wrong, right? It's that kind of admittance of being, hey,
yeah.
what's my fault,
Yeah,
and correcting that.
it makes you think some type of way, bro. Like, you know, what the fuck did I do that I came to this point? Now I have little capital. How do I use every single dollar to make it work in my favor? And then when you get more money in your account, you know, now you're trading over PDT, you have like 30, 40K with you, and like you're ready to go. Now you realize the value of your dollar and how far it's going to take you. That's when you can really start, you know, scaling up, putting in some size, because you know what setups to play, you know exactly what's going to make you the most profit and all
Right.
that shit, you know, and that's when you can really start coming up. Again, it takes longer when you have less money because you don't have that capital to size up. But in general, you know, that's just the name of the game. You got to take every trade small, hold in your gains, and like accumulate those smaller gains till you're at the point to actually size up on the same exact setups.
Yeah, exactly. And I think something that's also beneficial, right, for a lot of, newer traders is, a lot of people want to come to the market. Maybe they saved up, a good amount of money, but, I always preach start off small. I think, like you said, $5,000 is a perfect kind of range for traders to start learning because, that's what you're risking. I've had messages from people trading their life savings coming off of COVID because they're laid off or they don't have work. Maybe they're freelance kind of, or entrepreneur, and they put their whole life savings into this thinking that they're going to turn into a millionaire, and then they end up blowing up their account and losing half of their life savings or even more. When you have to be able to, you're gonna lose. You're going to lose. It is the matter of the stock market. That's why 90% of traders lose. And but the 10% that figure it out, like, hey, I just have to stop doing what I'm doing wrong and trade alongside with the market. That's how you're gonna be able to, Bullshark just made this point, but the only way to make an insane amount of money is to, size up and have a lot of money put in. But a lot of people can't even get to that point because they blow their accounts up and they don't give themselves a true chance. But when you start off with a smaller account and you learn consistency through taking taking setups and, yeah, the gains are a bit less, but learning and then being able to have that screen time, you're going to be able to compound those gains. And the more money you have, the more money you're able to make if you can, learn the true kind of process of how price action moves in the market and trade accordingly.
Yep. Should I blow your mind even more right now? Okay. So, so you see how QQQ broke down below your zone and immediately gapped back up with one candle.
Yeah.
Right? This is why I'm not trading it. Do you want to know what the net outflow is right now?
What?
Since the point that we were talking, it's been what, like 15 minutes?
Yeah.
We are currently at minus 2.25 billion outflow.
Wow.
And you're getting candles like that, bro. This is why you don't trade it.
Yeah.
So, again, it's just a big factor for me to say, like, yo, like, This is done. It's rundown. You know. Now I want to play run up, but I can't do run up without this inflow coming in. The inflow has stayed the same. It's still 700 mil, but the outflow is minus 2.25. Can't
Yeah.
touch it.
Yep, even more. Yeah, and you see that blue line, right? Blue line is just kind of staying stagnant. I mean, that's the New York Stock Exchange, but they're not really, putting too much out, but not putting any in either, right? Like you said, that inflow has stayed the
Exactly.
same, but the outflow has been, increased dramatically.
So it's exactly right, bro. It's hard to play a setup like that when there's no money coming in. You know, you want to play the upside, you want to see it go, but you need an influx of money to be buying. If they're not, it's just invalid.
Right. Yep. Exactly that point. But I mean, wow, man. I didn't expect this. Thank you so much for coming in and sharing
Of
your
course,
wisdom
of
and
course.
like I mean,
Anytime, bro.
yeah. I mean, honestly, you're talking about blowing minds. Like, definitely, my mind is blown because this opens up a whole nother kind of you know just
Everything is an upgrade, bro. Everything.
yeah,
You know?
exactly that point.
Like I remember, bro. I think it was in like June, maybe even earlier, bro. I was in your DMs. Remember, like, yo, how do I chart off the small cap? You know?
Yeah. Right.
You
Yep.
remember?
Yeah. I remember that. Yeah.
Yeah, bro. And like, I mean, now look at us, bro. Like, yes, I was still profitable back then, but I was just trying to add tools to my tool belt. You know, this
Yeah.
is just an extra set of parameters for you to be looking at every day to like, I don't know, be better than you already are, bro.
Exactly. I'm always, very open and always a student. You've got to be able to learn from people, right? Even though, whatever bias it may be, this or that for certain instances, right? You have to be able to take a lesson or just learn from something, no matter the instance, whether it be, technical analysis or like you're breaking down the whole kind of options, kind of logistics and, being able to tie those all together, right? That's only going to make you a stronger trader at the end of the day.
That's the goal.
Yep. Well, for sure, brother. Well, I mean that insane, dude. I'm gonna have to, pick your brain a little bit more.
Whenever you want, bro. I've
Yeah,
always
bro.
told you I'm always a phone call away.
Oh yeah, for sure, bro. For sure.
If you ever need me to come in here, bro, just let me know. Like, it, just they got lucky today because I'm not really trading much right now. So I'm like, fuck it, what's going on Discord? And then I saw you on the real ones chatting. I'm like, all right, fuck it, let's go.
Yeah, bro. And honestly, dude, I mean, you've increased my knowledge with options, or knowledge on options just this past, kind of hour kind of conversation we've had, and an immeasurable amount of beneficial information, that I'm going to be able to apply and, just start to even, develop, further kind of strategies, in the future, right? Because, look at you, like you said, look at us, right? We're talking 5, 6, 7, 8 months ago, and, the progress that we've made since then is insane, So we just have to keep compounding not only our gains, but our knowledge, because the moment we start to become ignorant and very arrogant and thinking, hey, I know everything, that those people lose money. Those people lose money every single day because you have to be able to be humble and open-minded.
That's right. That is right.
Yeah.
I'm looking at these 398 calls now, by the way.
You looking at 398 calls? Yeah, on
Yep.
this breakout of this downtrend?
Mm-hmm.
Let's see, 398. Yeah, they're starting to curl up here. I need to take these off.
Yeah, look at the 5-minute 20 EMA.
Yeah, we just broke up. Oh wait, this 5. Yeah, we just broke above it. So what does that tell you? Like when we break in base, right? The 20 EMA is a strong.
Yep.
Obviously, once
You
we
want
break,
to
you want it
base
to be used as support.
exactly.
Right, and what are you targeting here, right? You're targeting what, VWAP most likely, or this kind of where we
Yeah,
topped out?
even lower than that, bro. Where you got those tops? Look left.
Okay.
Yeah, right.
Yeah, right here.
That's what I'm looking for. Yep.
Okay. Yeah, and then we should get a nice little push just to the base of that. Right, and look at these. These are ramping up here, right? Since we mentioned it, we're up like 20%. shit. Damn, dude, these things are rocketing, dude. Good shit.
I told you, bro.
Dude, I know, man. Whenever I see all your posts, right, on your Twitter, dude, and absolutely, one of the most accurate options traders and traders in general, right? You don't get all the pumpish bullshit that comes with small caps, right? He's, laying down the business every day.
I'm currently up 12% right now on these as we're talking.
Yep.
I picked them up at 82 cents. They're at 95 right now, 15% on size, real quick. 17%, 97 cents.
Dude, you're fucking killer, dude.
Here we go. This is where you gotta know. This is where you gotta know.
And when you're taking a trade like this, obviously you have your target, but what is a kind of signal for you, like when you just cut that scalp, right?
Money.
Say again?
See money, take money, bro.
Oh, see money, take money, yeah.
See money, take money. I'm scaling out already. Like I took 100 contracts right there. I'm at like 30 contracts right now.
Yeah, exactly. Because we know that there's no reason to be greedy. Qs are every day we come to the desk, they provide opportunities. So take what the money or take what the market's gonna give you. But shit, bro. Yeah, I appreciate you coming on. I'm gonna, we'll keep in touch. I mean, we've been, messaging and everything, but obviously we'll keep in touch. But I'm about to grab some lunch here or something. But I hope everyone enjoys the rest of their day. Please, I've been saying this. I'll post it again. Give Dr. Bullshark a follow on Twitter if you haven't. Right, tons of information, and one of my very good friends. Right, even though this is our first time talking, we've been,
We love you in the House of Stacks, bro. Just want to let you know.
Oh yeah, man. Appreciate that.
But yeah, dude. I hope that you have a good Thanksgiving, bro, and I hope that you have a good rest of your week, man.
Appreciate that.
Yeah.
You too, brother.
But yeah, everyone.
So do you see how I came to that zone and rejected?
Yeah, right on that, dude. Right on. A little bit before, but still, very clear target, right? And who's gonna complain? Who's gonna complain about the profit, right? It's the chasers who get in trouble.
Yep.
Yeah. But yeah, once again, bro, thank you.
Take it easy, bro. Yeah.
Very thankful, very, very grateful as well that we're friends and everything. So everyone enjoy the rest of the week. I'll catch you guys tomorrow, and you guys stay green if you're green. If you're red, try to review and figure out why. So
Yep. Take it easy, brother.
Yeah, you as well, man.
I'm out of here too.